FoolsGold.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. Happy Fed Day. It is Wednesday, 31st of July. Chris, can you send me the little screenshot update thing of the what I'm supposed to be talking about here? Can't load YouTube page. For some reason, it's frozen, so I can't see what the YouTubers are seeing. Oh, there we go. Well, now it's finally come back. All right, so what are we supposed to talk about today? Breadth data, not a bad idea. Just check in with the dashboard, see what it's telling us. I had a bunch of econs come out here earlier this morning. So question is, does that affect Fed's thinking here? I don't know. I'm on the fence. But I do see that some econs did come in slightly weaker. We'll get to that in a bit. I think we had a bunch of tech stocks report overnight. And so as a result, they've jumped up smartly. We were talking a bit yesterday about how stocks like NVDA actually done some serious damage technically. So I don't know whether one day is a new bull market, but it does make sense to me that maybe where it got a little bit oversold on the downside there with things like NVIDIA. Well, I suppose we can take a look at that in a moment. I don't like the fact that they're rallying the market so smartly here into the Fed announcement. I've talked to you guys about this before. The rule is if they rally the market into a Fed announcement, that usually means bad things on the other side of the event. If they sell the market off into the Fed announcement, that usually means good things on the other side of the event. So, NASDAQ's having an absolutely monstrous move higher here today. I don't know what that's going to imply on the other side of this event here today. Anyway, we will be doing our FOMC meeting there. Probably, I guess, in about 2.5 hours. So we'll keep this brief, relatively brief, and then we'll reconvene here in a couple hours. So breadth data, interesting. Quite a bit of oversoldness, especially in the crypto space in the short term. So we're probably going to see a bit of a rally there. Not really much coming out of the U.S. stock market, interestingly enough. I think the one area that actually caught my market was sort of like international equities, where any sign of a little bit more weakness, and we might have gotten an oversold condition. In fact, we might have had one yesterday. Oh, not quite. You can see now the medium term is starting to approach that oversoldness. If we don't do one of these oversolds on both the short and medium term, it probably means that at some point in the not too distant future, we will have that dump, which creates that situation. And I do think that actually we don't have it written down on here, but I do think that the Japanese raising interest rates, so I think basically the first time in about 10, 15 years, that in itself is causing a lot of capital to move around in different directions here. So on top of the fact that we had tech stocks come out with relatively bullish numbers, things like NVIDIA, we had the Japanese raise interest rates for the first time in a very long time. Also talking a little bit about sort of normalizing their balance sheet, reducing bond purchases, all those kind of fun things. So you can actually see that the Japanese yen did jump up here smartly. We've been talking a little bit about this recently, and that the weekly trends here on the yen, of course, have just been absolute train wreck, lower highs and lower lows. And if anything, what I would almost kind of think here is, as sort of you can see on the chart here, if this is actually going to turn into a bull, then we probably want to rally back into, previous support. and resistance levels, then come back down, test the lows. And if we W out, then we got ourselves a new bull market. Right now, I would consider this nothing more than just a dead cat bounce. Also, too, this is going to be hugely influential on what the Americans decide to do going forward. I'm not totally convinced that lower interest rates are anywhere in our future. But if we look at the econs today, I think they came in relatively soft. So where's our econ sheet? Econs tastes great. I got it over here. Coming out this morning, employment costs, the benefits just sort of in line, wages in line, nothing really startling there. Employment cost index actually ticking down a bit. I suppose that's going to make the Fed happier. I'm not quite sure what this translates to on an annualized basis. This is quarter over quarter. Chicago PMI came in, a lower reading. And actually, this is kind of an interesting one. Do you go with the consensus or do you go with the forecast? Sorry, something in my eye. If we go with the forecast, came in quite a bit lower than expected. But if we look at the consensus, came in actually a little bit higher. Having said that, still a very weak number, no doubt about it. And if we look at the trend of that data set, we talked quite a bit about the Dallas and the Texas area econs, with this sort of stabilization following the whole COVID nonsense. I think that the sort of air is coming out of the Texas and Florida bubbles. Interesting how Chicago PMIs came in very, very weak there in the spring. Jump back smartly. We've been talking a little bit about this. You saw the retail sales number, the Johnson Red Book report I showed you yesterday, that there's kind of a scratching your head, kind of which way is this economy going? I don't know whether we're going to get really clear data points here. It does look to me like the Chicago, the Illinois economic situation, it doesn't really look overly bullish. But, considering how high short-term interest rates are, the Fed is getting its desired results here out of the Chicago, Illinois area. Pending home sales, of course, this has been the big bugaboo. And Jerry's probably going to make reference to this later on today. 4.8% month over month increase there. Quite a bit stronger than what people were expecting. And I think we've also been talking about that recently with you all, in that when we were looking at things like mortgage rates, you can actually see that the inflationary pressures are abating. Ooh, we got a new M coming in here. Did notice the bonds were going zooming up here. And this might be one of our tells that, all these interest rate increases are finally taking a serious toll on the consumer and the North American economy. You can see the bonds right across the board, long end actually rallying smartly over the short end, but nonetheless, you can see the short end is trying to turn back up here. That's just an intraday chart. But if we look at like a little bit longer term charts, and then if any of you have looked at my sort of cost of money charts that I share with you, the point here is, does this 2-year note turn back up and W out, and in essence, bond prices moving higher, yields moving lower, which will cause the Fed to act. I think as it stands right now, this market is still very range bound. And as a result, I think the Fed just will look at this and say, doesn't look like the short end of the bond market is the sort of market proxy is telling us to do anything right now. It's still sitting on the fence. Having said that, we have seen a bit of uppie here recently in bond prices, lower pressure on yields. And you can start to see the curve itself is starting to turn. So this 5-year, the belly of the curve, as our level 2 instructor Marat likes to call it, That's looking actually like it wants to try and break out. So, again, this is totally like the Fed. We are data dependent, and I'm sure they are all watching this chart like a hawk here. And as we go further and further out the curve, you can see that the 10 years trying to turn up again. Haven't broken out yet. Can't put the cart before the horse. But for those inflation hawks, obviously, these W's, if they do come in, and on the long end, same sort of conversation. You can see we are Wing out just here in the short term off of that Chicago number, probably. But we haven't broken out here yet. We're still stuck in this range, but things are pointing in lower interest rates direction going forward. The problem with all of this, of course, is that are we supposed to make any grand decisions about market and market direction on ahead of an actual Fed announcement? I mean, ironically enough, our rule is that we really shouldn't trust anything that we see in the market until one full hour following the Fed announcement. And that's the one thing that kind of bothers me about the stock market here, is, as I said, you don't really like to see the stocks ripping higher here on a Fed day, because Jerry might come out and say, well, we're still data dependent and there's no change in our policy just yet. And the whole damn fucking market rolls over. So be careful here. I don't know whether I really want to get too sucked into the bullish euphoria so quickly. So let's, obviously, like I said earlier, let's wait till the Fed actually does its thing, and let's wait for a full hour following the event. As you can see here, and this was a really interesting, you can see I got all my crazy orders here. Okay, let me get rid of all this all at once. Just go away. All right. We've done some serious technical damage in the stock market, right? This is the daily ES momentum picture for volume and price. What was really interesting yesterday, and I think this is on sort of international events, like I said, the Bank of Japan has finally moved off of zero interest rates. So I guess a lot of international players are figuring that the Japanese economy is finally starting to uptick here. What I did notice yesterday, we were sort of just heading our way lower. You can see we finished here. We actually opened up yesterday with sort of a gap lower. Everything was bearish. We talked about NVDA breaking down, and oh boy, things were a mess. And then all of a sudden, out of nowhere, and what was weird about this is that this all occurred following the US session, right? There's the US market. In fact, after the bell yesterday, we had Microsoft come out, and Microsoft got absolutely smoked. It was like down 10, some odd 15% or something in after hours. I mean, you can see this was 1244 to 54. So obviously people got news about that Microsoft number. And then all of a sudden, like literally on the market close, beep, there's the end of the trading. And the market just literally went straight up here over the past, 20 hours or so. I mean, very bizarre. And usually, usually the market doesn't like, especially the Americans, right? They don't really like when overseas action actually dictates what's going on here. And I hate to say it, but if we look at something as simple as the SPY, the good old S&P 500 depository receipts, they've left just an absolute monstrous gap here on the charts. I mean, there's no way that this can just be left open. So I don't know what the heck's going to happen here. I suppose you could argue there's gaps to the upside that need filling in. But like we closed yesterday here, and now the official retail open in the States is here. This has got trouble written all over it. This is all open air down here. So, again, as I said there a few minutes ago, I think we better be very careful about getting too bullish here. And as we had said, stocks like NVIDIA jumped up smartly. But again, we finished the day here, and we opened up the retail session here. This is insanity. That's all technically a gap all the way down there. I mean, there's a little bit of a gap right there. I mean, I don't know. We look at like those overnight charts. Actually, I don't know whether this will show. Yeah, there it is. So you can see, there's where we finished the retail session. Then in after hours, we jumped up, and I think they came out with some pretty half decent numbers. Then we just ground our way higher here. And if I'm not mistaken, I mean, the whole market is just heading straight up into this Fed announcement, which has got trouble written all over it, right? If we look at the broader picture here, Dow's up 222 V bottom straight up. NASDAQ up 441 points. What the fuck's going on here? Obviously, that's going to drag the ES a good chunk higher, and the Russell 2000's even participating. And this is almost the exact opposite image that we saw yesterday, right? NVIDIA, of course, jumping up. But I don't know whether I can believe that crazy chart here. This is a mess. Not clean price action whatsoever. And I guess the scary part about it here, this is, if anything, a really, really good reason why you do not chase. So anybody who came in here and actually shorted down into here, well, you can see where the M top is. You can actually see where trend line resistance is. We could very easily rally all the way right back up into this top and then roll back over and back down we go. So I don't know whether I'm really going to be like too jazzed about one day being a new bull market. Maybe this is like a gap and go. So you could measure this move. Interesting. We just banged up against the 13 EMA in this trend line here. And if anything, you can kind of see how this is like shoulder, head, neckline. Do we have to come back down, fill in all these gaps, right? And then as long as we hold that low, then we can turn back up, and that's an inverted head and shoulders, which paints a upside move. So I'm not, again, I think I've said this 2 or 3 times today, and I think it's the theme of the day. I'm very skeptical of the fact that they've cranked these stocks straight up here into this Fed announcement. Something does not smell right about this at all. Anyway, what a screwy looking profile too, eh? Just ridiculous amounts of gaps on the chart. And actually what's interesting about this stock, I was thinking about this last night, is Mr. Druckenmiller, who I think is probably one of the best traders to ever live. He turned bearish over here. So, in the sort of April, May, June period, this run up, everybody was kind of chuckling. Oh, maybe that wasn't such a good idea because Mr. Druckenmiller got out here. And oh my goodness, you maybe missed the bull. And if anything, I'm sure he's sitting there going, good. Thank God I'm not wrapped up in this nonsense, because this just looks like a mess right here. And certainly no reason to be thinking about buying an asset that looks like that. Just a mess. You know me, I like my W's. There ain't no W's anywhere in sight there. So we had some pretty crazy action overnight. Of course, in the crude oil market, we had a pretty big event there with one of the thank you. I think it's Hezbollah, one of their sort of leaders. The Israelis whacked them. And then the Israelis, if I understand correctly, went and actually like literally bombed downtown Tehran. So never a dull moment in the Middle East, but when is that not the case, eh? So again, same sort of thing. We also had that Japanese central bank news. So a lot of overnight developments, but again, this is the same thing as we finished the retail session for this crude oil futures contract down here. We gapped higher, and we've just gone straight up here through the overnight session, just blasting through any kind of resistance. Probably we got to work our way back up to 13 EMAs. And, this is probably like an inverted head and shoulders like we saw there on NVIDIA. You probably see the whole damn market act like that. And so, I have a very difficult time believing that this is any sort of new setup here. I think that we're just doing, like I said, on the NVIDIA, it's sort of like the whole market is carving out. And keep in mind, we did have a trend signal shift there. So we are technically trending down here along, you saw the NVIDIA chart, just the most beautiful top. And the stock market, same sort of thing. I mean, we this one doesn't really have a very pretty M. And if anything, what I kind of noticed was if I did a Foggenbaum off of this W, look how that actually takes us right back up to these old highs. So I wouldn't be surprised over the coming weeks. We sort of grind our way back up into the top. But at the same time, too, if we do start getting M's up here against these highs, this is going to be like an Adam and an Eve. So that's what I'm going to be watching for here going forward. Can't really step in front of that. And then, as I said there a moment ago, who knows what the hell Jerry's going to say here this afternoon. You might find that damn market gaps lower tomorrow. So, you can see where the 200 SMA is on this chart. It's still pretty risky stuff. But a W has come in here, so I wouldn't be surprised in the near term we work our way higher. So didn't really see anything compelling out of the econs today. Of course, we have the big jobs number on Friday. That's probably and I wouldn't even be surprised if the Fedsters already sort of got wind of what that report number is going to be. And keep in mind too that those numbers are highly suspect because they're government data. And I don't know, do you think Biden and whoever is running the show there are going to manipulate those numbers to make sure that their person gets reelected here this November? It wouldn't surprise me. So it's pretty typical politics. So really, let's listen. I mean, if Jerry comes out and starts saying, I think we're at the position where we can start lowering rates, you might find that the stock market just takes off like a rocket here. And I'll be watching how it acts against these old highs here, 2.618 and into reload zones, Julian's favorite fib, all that kind of levels. Talk going forward. Obviously, this audience is slightly interested in things like Bitcoin. Now to make a bullish case for Bitcoin, you notice that it's not going like uber crazy bullish on the event today. So in a weird sort of way, and actually this probably this is I think our weekly chart. Yeah. In a weird sort of way, the fact that Bitcoin's relatively calm through all of this, you can see it's kind of just sitting there going, I don't know what I want to do here. That in itself, it's actually relatively supportive. Had we seen Bitcoin face ripping straight up here today, I might have been like, oh God, this could turn into a nightmare on the other side of the Fed. I think you can see a 3-bar fractal that could potentially fire. So, for those people that do trade the corn, I would be watching this low very closely. If that 3-bar fractal does fire, then we're back in the soup. And interestingly enough, you can see we do have the divs in place. I think Willie went stupid there. Yep. So, you can make the argument that this market is overbought. But no outright sell signals. And if anything, like I said, I would prefer that this market not go face rippy up into the Fed. And maybe that means that, hey, we just go sideways for a bit. We still got to get through this crazy ass downtrend line, start putting in structure on the other side of the trend line for us to think, all right, we're getting ready for a new bull leg. So just right now, big hurry up and wait. The other cryptos, I suppose, watching this Ethereum setup, still working away. I've moved stops to just above this M top. So if we do go and break this top here, then I think we'll just close out those shorts and start preparing for bulls. And you can see this is the same conversation as Bitcoin. We've got this downtrend line working. In fact, you could make an argument there's even another downtrend line here. So Ethereum, to actually be a bull, Ethereum's got a lot of work to do. And I think I've said this repeatedly to this audience. I don't know whether Ethereum's actually the place where to be looking for to make a ton of money, because I do think there are other players in this space that are kind of eating Ethereum's lunch. And that brings us to Solana. Actually, if I'm not mistaken, I think I saw another name that was pretty popular in this space, the Render, said that it's moving over to the Solarium network. So, you can sort of see one by one, Mr. Vitalik supercomputer, because it's so expensive to use. A lot of people are like, you know what? Let's go use Solana. I've also heard too, and I have seen in the past that Solana is not really the ultimate sort of expression of the whole blockchain and immutable ledgers and stuff. I mean, they can just shut Solana down if they want and reset it at any given point in time. So I'm not going to really comment on the fundamentals. I know Sjord's not overly impressed with all this. Be sure to tune in to TRI's Tuesday after party shows, where Sjord comes on and gives us his fundamental criteria, picks, comments about the space. I have to say, I think Sjord's one of the best crypto analysts I've ever had the privilege to interact with. So, if there are places to make money, and ironically enough, I think that the whole meme coin environment is just getting ready for the green light. It might be the Fed here. We got to get it out of the way. I think I showed you I picked up a little bit of this DITH here recently. So just been watching how this act. I think that these ones want to move higher. You can see this guy's trying to recapture its bullish inertia. I still think we head up into 2.618s up into these wicks up here, release these trap bulls up here. And that will give me my double level. In fact, I have an order working at that 14 area. And I'm seeing a lot of this kind of price action on these Schult coins. I'm not quite sure what you want to call them. If we're going to have a fun summer crypto market, I think this retire here, I think it just put in a double bottom. And actually, I think I threw in a stink bid off the double bottom level. It might have gotten filled here. Yeah, anyway, there's the double bottom. Look at the size of the volume coming in here. I suppose your really slick double bottom was right down in there. But anyway, yeah, I mean, you tell me, does this thing have any room to move up here through the summer? So, get ready. I think we're within, probably days, weeks, if not, of us being back into silly fun season in crypto. I think what we got to do is get through this Fed here today and get them off to Jackson's Hole and all that kind of stuff. So, fingers crossed, Jerry doesn't come along and poop on the market. And if anything, like I said, I'm actually kind of pleased, if you are a bull, to see that Bitcoin's just parked. I mean, momentum doesn't look really overly exciting. So there could be a problem there. But, the way that they're rallying the stock market here and some of these tech stocks, in this really weird price action where everything's just zooming straight up after basically falling off a cliff yesterday. It's a bit suspect. I really don't like the fact that they got the NASDAQ here up 2.5% heading into the Fed, and you can almost see that the bulls are kind of looking a bit exhausted here. So there's your report. All right, why don't we leave it at that? That is 9:30, so it's about 20-25 minutes or so. Hope you got some value out of that. Let's if you can circle back around and join us for the Federal Reserve FOMC sort of color commentary that we do. It's kind of a fun show. We won't do an after party here today. We'll just meet up here in basically about 2 hours for the Fed meeting. All right, have yourselves a great day. PMA for the win. Slow and steady wins the race. Remember what your number one job is. Don't take no win nickels. And the only thing that I'll probably say to you is bye for now.